Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from TicketTacker. We have a pretty volatile market this morning, down about $28 in gold, 1835.20. Fast market, as you can see. The prices are flashing pretty fast. Silver is down 237. We seem to have a tug of war going on between the bulls and the bears. And obviously, the question is, are the buyers into this strong hands? Let me just double check to see if my sound is working. Testing, 1, 2, testing. Testing, 1, 2. Test. I think we're okay. I have recommended all my traders this morning to cover the short positions, to cover any short hedges that you may have in the market. If you came in short hedged with dust, we recommended to pretty much go flat dust. And these is the kind of intelligence that the VCPMI is able to provide us self-directed traders, which is pretty much what I'm sharing you here. On the face of this just a tremendously volatile market here that is of a historic nature with regards to GameStop, with regards to what happened with Reddit. My understanding this morning is that the stock, GameStop, has dropped something like 65% already. So the hedge funds are regaining the control over the short selling. And let me double check here. Testing. I may be having some issues here. I apologize. Can you give me a sound here? Test sound, please. Testing, 1, 2, 1, 2. Okay, I think we're good. You may want to just double check your volume on your computer. Sometimes that would seems to be the problem for me. But anyway, coming back to the markets, the correction here that we have is providing an excellent opportunity to get on the long side, regardless of any of this nonsense going on with Reddit or Wall Street bets. So pretty much the bottom line is that the one thing I believe is making the difference is that obviously this has turned the focus, the world focus, into silver for the first time in I think the history of the silver market. It's being talked about in every channel on the internet, and it's become the focus of and the interest of a lot of money out there that seems to be looking for alternatives. Let's watch the market here a little bit and see some of the other markets as well, and see what kind of feeling we're getting. We are extremely oversold on the daily in gold, and we are at the B2 level in silver, 2702. So we want to keep an eye on a potential reversal in silver from this level. In the gold market as well, because I believe that the gold market is another sleeping giant, I think, waiting for a reversion to occur. And I think what you're looking at here is the market trading in the blue area, which represents major support where you can potentially identify buyers come into the market. The trigger point here is we close above 1840. It activates a day trade buy signal. The weekly came down to 1830.40. 1829 was the buy one weekly. And so the question is whether the market is going to test this level, or by closing above it, above 1840, it's activated pretty much the completion of this weekly signal and also the daily buy signal. Let's watch the market here for a little bit, please. The market has slowed down here in silver at 2706, which is the daily buy one level. And at 715, conservatively, if you're looking to buy long, it activates a buy trigger on a close above 2706 in silver. Right below 2706, we have the weekly average of 2652. These are pivot points, levels that represent turning points in the market that ideally increase the mathematical probabilities of the model, the VCPMI, to identify mathematical probabilities. For example, from the B1 level, we're looking at a 90% probability that if the market closes above 2706, it activates a buy trigger. It activates a buy signal on the daily with a probability, with a 90% mathematical probability that the market will revert back to the mean, and the initial target is the level above, which is the the B1 level. Basically, we're looking at. Let me just adjust this here. This is the B2 level that we're looking at, and the B2 level actually has a 95% probability of a reversion to unfold. And so we're watching the market to do what it's going to do. But if the code is a close about 2706, buy long at the market. This is the C++ language code actually written in TradeStation, which I'm sharing with you here by reverse engineering that intelligence. For those that are serious traders that are looking for that are thinking out of the box, that are looking for alternative ways to trade the market. And it's not a perfect science, but bear with me here. I think I'm not sure. We seem to be having sound problems here in a couple of, except for YouTube here. Can you verify sound is working here? Testing 1 2. I'm being told that my sound is fine live streaming, so I'm not sure where the problem lies in here in terms of the sound, but I apologize for that. Once again, we're looking for a buy trigger in silver on a close about 2762. The mini has found a reversal here the last couple of days into that 3650, 3700 area, and has moved into pretty much what appears to be the distribution of supply area once again at 3817. I want to alert everybody for a potential reversal in precious metals from these levels here. I recommended this morning to my traders in my private trading room, once again, to cover their position. This was at pretty much 1253. We have been trading dust in order to capture these short-term corrections in the market, and pretty much my private trading room is updated literally 23 hours a day. As far as market information, market intelligence, I provide the VCPMI prospectively for my traders, so that you can position yourself here. We have an interesting market going on here with the metals, that on the face of obviously all this Reddit noise that's making here, it could be that this was a bit of a bull trap, obviously, to those guys that came in here on the high yesterday in silver. But I believe that this correction, once again, is an opportunity for those traders, those real traders that want to take advantage of prices down here based upon the fundamentals that we have, which is the reality of what we're talking about here. The fundamentals that we have are driving pretty much a lot of interest in the price of silver because they pretty much are giving us inflationary expectations, and people are anticipating that kind of environment here developing very, very shortly here as the Feds continue to print money. So that translates pretty much into inflation, and so smart people are beginning to see, where they can put their money as a hedge against this increasing black swan, as that I believe is going to be a little more than just regular inflation. And which is one of the reasons why I'm looking to trade into the metals markets and why I'm suggesting my traders, my subscribers, to do the same. Basically to take a little bit of the cash fiat dollar, which daily is losing value, and to put it into some kind of an asset, particularly like gold and silver. We're crossing here at 2708. We closed out a position last night for 23,895 on the short side, and as you can see, the market is we're going to buy a silver. We're going to buy a silver here at the market. We're in fast market. We've activated a buy trigger. Now, you as a self-directed individual, can decide whether to watch this or not, or execute it or not. I just put out a recommendation to my live trading room for my live traders to pretty much execute this in live trading in their accounts. And we're going to be running this signal here based upon the application of the VCPMI. So if you entered into this signal, then you had three choices as a stop. The most conservative stop is a close below. It's a close below. You can exit your position conservatively. 2706. The second stop is to hold on to it until the close. Now, if you haven't, or if this is the first time, please be cautious in terms of the size if you want to follow it, and you may want to just follow the simulation first until you feel comfortable and understand what and how mean reversion trading applies. The third stop is a max dollar stop based upon your profile. So if we take out the protective levels out of the equation, then again, depending upon your profile, you can use any three of those. Automatically, the target is activated above, which is that 2815. And that is the sell one level above. I personally have a dollar stop that I carry. And for me, it particularly is measured upon, the volatility of the market, obviously, and your personal profile. And in silver, we're dealing with an extremely volatile market, and so you want to allow for the market to breathe into this volatility, which is above average. And so you want to measure that that stop either conservatively on a close below at the end of the 15-minute bar. This is not a straight stop. The stops are on the close only. Very important. The only time that you use a straight stop is when your position is entering a profitable trade. But in the meantime, use the 15-minute bar close, which is in about 9 minutes from now. Silver is a highly, highly volatile market, as you can see, down 236, up. Yesterday was up about it was up to $30 an ounce. We're down about $3 from those highs. So it's an increasing volatile market. The signal trades every 15 minutes. And it trades within a Fibonacci structure, which is a perfect 5. We use maximum of 5 pivot points. Now, looking at the price, 2706 is the buy 2 level daily. And you're looking at a probability factor standard deviation to the mean of a 95% probability. If we close below, it goes neutral, the daily signal. And you're looking at the level below, which is the weekly of 2652 as the weekly average price. That becomes active as the next level, as the next pivot point. We are in a major area of support. Mathematically, from here to the mean of 29.25, it's a 95% probability. So on the close, from here, we're looking at a high probability that if it closes above, it would activate a buy trigger with a strong momentum to the upside. If not, it will stay neutral for day trading. And if you bought it early, it basically would stop you out, again, depending upon your profile and the stop that you're using. Generally, depending upon, again, the risk you want to take, holding a position from B2 even to the end of the day can give you the time that you need for the position to build the momentum that it needs to be. And so we're looking at this level here, not only to be at 2706, which is the extreme below the mean of 29.25, the daily average price, but we are right into the extreme below the Bollinger Band as well, crossing into this level, this buy 2 level. So the risk is up to you in terms of how you manage it and how you choose to follow the direction. And what I'm showing you here is a live signal that has activated a buy trigger from B2. And but again, it gives you three choices of protection using the 15-minute bar. A close below is conservative. A close above activates another buy trigger. Momentum is activated. Well, the third one obviously is you hold on to the end of the day from B2, because the probabilities are 95% again that by the end of the day we'll see some kind of a reversion unfold. The fact that the market just slowed, or the selling pressure has slowed, the momentum down here is pretty promising. And here, obviously, we're beginning to see buyers come in, reflected in the price, turning the price to green. But we are at a level that more than likely will see some kind of a reversion as the day progresses. I am going to hold on to my position here till the end of the day from these levels here, particularly as we are matching pretty much the lower Bollinger Band that we have. I am holding this trade till the end of the day personally. But again, you want to measure the risk according to your profile. The one thing that I have learned that I can share with you after all these years that I've been doing this is that the risk is measured differently with every trader. Not every trader is homogeneous, as I say, and what may be a comfortable risk for you may be uncomfortable for somebody else. What may be a comfortable risk for me may be comfortable for you as a self-directed trader, and that's something that you got to measure according to your own profile. I'm willing, to take the risk in a different way, um, more or less adhering to what I see here as the VCPMI identifies these signals here. It doesn't mean that they are 100% correct, so you got to measure that accordingly. It's very important. Particularly again when we're dealing with silver, which is a highly volatile market. um, Anything can happen here, so you got to be prepared. If you put a stop underneath, you probably got stopped out. And as I said, my position here, I'm continuing to hold on to this here, as we are extremely below the mean. And I do expect to see some kind of a reversion to unfold here. Buyers to come into the market. The gold market is turning friendlier. Um, the chart is beginning to be a little friendlier here for the gold. So it's a question of rotation that's taking place right now in the metals. Good rally in the stock market here. Market just continues to define the economic mess that we're in here, as I believe what it is anticipating is a lot more stimulus to come into the market. Nugget is down about 362 here, which is the derivative here, but it's activated a buy signal here from this level. So we want to pay attention to what's going on as well in the derivatives area here, as I continue to recommend that I think this correction is a buy-in opportunity. So we want to be patient, let the market come to us. But when you're taking a look at some of these derivatives, like Nugget, for example, or even GDX, they have activated buy signals. And so this is how it begins to rotate from the shares into the futures, as we begin to move into the reversion unfolding here, which is pretty much what we're beginning to see here. A reversion seems to be unfolding. Ladies and gentlemen, we want to pay attention. If you came in with a hedge with dust, we recommended that you take profits here and cover your hedge as the market has completed the short-term target. Dust is a bearish ETF, and we use it for us to, pretty much protect the downside of the gold market, and it rallies in price as the market in gold comes down. $36, $70, $80 traded, $90 fast market in the gold, it looks like here. Always carry a max dollar stop underneath your position, regardless of any signal given, is what I do. And when it reaches my max, I simply get out. And that depends upon your profile that you need to measure. So underneath every trade, regardless of how good it looks, you want to have a maximum dollar stop where if the market comes down below that, you want to get out. And in this kind of a volatility, uh, you know, you might get stopped out more than you think. So measure the risk and the size, particularly if you're trading in the silver market. There's a lot of nervousness out there, obviously, being that a lot of this GameStop stocks or this frenzy, I think they pretty much have collapsed quite a bit. So if you reached your max dollar stop in the silver, you get out and just wait until you re-enter the market until you get a better price. But I think if you reach the max dollar stop, get out and then wait for another signal. But the volatility seems to be increasing here tremendously. The sellers are looking for a lot of the stops. They're testing the hands, the buying hands. May come down to 52. We don't know that, but it is oversold, extremely oversold. I think that obviously the selling pressure or the selling or the supply or the short sellers, whatever, are definitely looking to clean this up. But into this, it's coming into this area where once again I am expecting a reversion to unfold here from these levels. $33.70, $33.95 traded. $34.10 traded. $34.40 traded. It looks like the gold market has defined the area of 1834 as a highly traded area here. So let's continue to watch the supply and demand exchange going on in here at 1834. Continuous selling pressure here. Looking for stops. The gold market is made a low of 1830.40, and the buy one level weekly was 1829, so we came pretty close to a weekly buy signal here in the gold market from the buy one weekly average. A close above 1840 on gold would activate a buy trigger. A close above 2706 in silver would activate a buy trigger. $1830.40 was the low. $1835.20 trading last. Some good buying is coming in. Maintain your long-term derivative positions, maintain your core positions in gold, and use this correction to add to those positions here. Once we get more confirmation, you can comfortably add to those holdings, to those assets. I understand a lot of people are using the futures contracts to take delivery of the metal here, since the physical market seems to be extremely tight. And so the only place that these short sellers may come into the market and try to control the price is obviously in the paper market, in the futures markets. $38.22 on the mini, up 56 points, up 149%. Silver, gold down 28.50, down 1.53%. Silver down 254, down 8.61%. You know, I want to warn everybody here that you need to prepare to see silver trade 5-10% in price. The volatility that we're looking at in the not too distant future, I believe, is going to be unprecedented, particularly for the silver market. So any correction, given the opportunity, is a great opportunity to add to your holdings that you want to hold on to, your core position you want to hold on to. So buy assets that you can hold according to your profile, and trade the market with a VCPMI short term, as I'm doing here, as I'm showing you for day trading. But I also use it for building a core position, a long-term position, which is what we're doing, which is what my traders are doing here in my private trading room, and measuring pretty much the risk for short-term trading in the futures markets accordingly. I know it's frustrating here for a lot of longs in the metal here that we're counting on this market to continue to explode as it is, with the rumor, you might say, of Reddit or Wall Street bets and so on, which is, a lot of those guys that bought the market got clobbered, obviously. And most of those scenarios that unfold of that magnitude usually turned out to be the peak of something. And unless they took their money out, obviously, unless this guys that made millions of dollars, one particular fellow I heard made about $40 million. If he didn't take it into that rally, I'm sure he's lost it all. Because that's the volatility that we're going to be trading across the board, not only here in commodities and futures, which is the most volatile area, but also in stocks. I think what happened last week with GameStop, basically it broke the benchmark of what volatility could be potentially. And so when you look at some of these instruments that are completely depressed, like silver, the most depressed undervalued asset in the world, moving into a highly inflationary environment that mirrors the 70s. With the difference, obviously, as I point out, that interest rates are at negative. So there's no room to control the monster that they are unleashing here, inevitably long term, by creating this tremendous amount of stimulus. And my fear is truly that we're going to jump right into hyperinflation. What happened here in these markets is just an example here, I believe, of things to come. And as we move into this new virtual world economy, we haven't seen anything yet. It's a great opportunity. As you hear, millionaires are being made in a short amount of time. The question is how you manage that success and how you manage the risk. So I continue to recommend to be patient to my traders here. We have a tremendous environment. The drawdowns may be greater than may be comfortable for you. But if you're looking for positioning yourself in the big picture, which I believe is much, much higher prices here in gold and silver, I think you need to fasten your seatbelts and just hold on. Be patient and trade with money that is comfortable for you, that will not affect your lifestyle, that will not affect your personal life, your business, so that you can sleep at night. Be smart. The market here, this environment is creating tremendous opportunities. And it's up to you as an individual how to take advantage of that. I am holding on now my long bias in the market, and I'm willing to hold on to any short-term corrections here as my assets that I have are not on margin, except for this futures trade, which is a small part of my overall portfolio, which it should be. And you should only allocate a very limited amount specifically for day trading. Thank you once again, everybody, for listening to how I'm applying the variable changing price momentum indicator in these incredible markets that we're in. And please be patient. Don't panic. Don't chase the market. Just be patient. Let the market come to you, because this is an incredible, incredible buying opportunity in precious metals. Take care of yourself. Be well. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.